Trader trepidation, that's the mindset for traders in this new year after the markets hit bottom in March and more scandals were revealed. So how are traders getting ready and getting that psychological edge for 2010? Joining us now is trader psychologist Dr. Doug Hirschhorn. Good to see you. Happy New Year.
Happy New Year.
There must be some trepidation after what a lot of traders went through in the last year. Their pay scale is completely out of whack.
Right.
How does that affect their ability to trade? Because that affects the average investor.
Yes, and what I talk about with my clients is that the focus that they have right now affects how they're going to focus in the future. So if they're worried about their comp structure, how they're going to get paid for the trades they make, then they're not going to be able to focus on the trades they've got to make that money.
Come on, traders aren't worried about their pay, are they?
They're very worried
never
about
worry about that.
They're the one true entrepreneur, and it's a pure meritocracy. At its purest form, it's literally eat what you kill. And if you don't have anything to kill something with, right, and you don't know how much of that food you're going to get, they're saying, wait, why would I want to go out and kill the lion if I'm only going to get like a little bite of it?
Traders need to be risk takers, but are you saying that because of what's happened with pay, they're far more likely to be risk averse right now, and that's going to cost them?
I'm saying the more time that goes on, you're going to have, it's a demotivating factor for them, and they are going to become more risk averse about taking into the market.
Aren't a lot of these guys still scarred by the near-death experience they went through last March? And isn't that kind of a good thing in terms of getting them to not take too much risk?
There's a misunderstanding that these guys actually thrive on the opportunity that presented itself during that environment. So the professional traders actually, a lot of them did very well this year economically because the world almost died. Mm-hmm. And for them, that's a disconnect and opportunity. What they're worried about right now is, okay, regulation comes in, a lot of uncertainty about what the rules are of the game, and if I don't know what the rules are, if I don't know how I'm going to get paid or how much I'm going to get paid, I'm not so sure I want to go out there and do it right now full boat.
Can you extrapolate from that, though, how it would impact the broader market? Because a lot of these guys are large traders. They move a lot of stock.
Right.
If they are less willing to take risk, can you extrapolate from that there's less volatility in the market as a result of that?
Yes. So the expectation is that equities specifically are going to be hurt most by this, as far as there might not be any defining range. Because remember, it's not necessarily that they're trading, but it's who they're talking to. So they're talking to the banks and the sales traders, and the sales traders are saying, okay, boy, the big fish aren't really doing much, or they're not really looking for trends, and then that trickles down to the masses is what happens. And then you get the larger picture, a lot of smaller people participating, and that's what moves things.
That's going to be fascinating. So we may have less volatility. Thanks, Doug. Appreciate it.
My pleasure.
I doubt it, though. it was worth it, but there's going to be more volatility ahead.
We'll be back.
So long as I'm around.